That's the big topic is, what's holding or straining the market. And it's not interest rates, because there's plenty of buyers out there. As you saw, you just qualified a few more,
this
um,
weekend. Yeah.
yeah, this weekend, and got some deals accepted. It's inventory. The market is not crashing. The market is far from crashing. I'm working with one buyer right now. She's looking for a ranch style home, St. James, Kings Park, Smithtown, around the 650 range. And we've bid on a few things, and we just keep getting bid out, you know, 50,000 over asking. So it's inventory that's really crushing the market. It's keeping prices high, but anybody that thinks that the market is crashing, um,
It's
they're,
not the
they're
case.
yeah, no, it's definitely not the case. And I really want to put that point across. I can even, I wanted to share a some some stats off the right directly from the MLS that show we're down in transactions for the year so far. From last year, I think we're down. Let me just see if I can share my screen here. Chrome tab right here.
We actually even had we actually had a little bit of a rate correction last week, and we actually saw rates drop about a 0.5%. Although we did lose some of those gains, but they're still, very, very competitive and historically low when you look at the history of rates. But yeah, to your point, I don't think it's so much the rates that are slowing things down. I definitely had a lot of activity this weekend. I think we have about 4 or 5 new offers that were accepted. So the activity is there. So to your point, it's obviously
Yeah,
still an inventory challenge.
yeah. I mean, if you look here, Suffolk County, we're just going to do residential, and then sold properties, the number of transactions, and we go down to the chart. June prior year 17,262. So we're down almost 8% in transactions from last year. And there's only, this is up. The inventory is up. I think what did I say it was? Um, Last time we spoke, I think 2,800 homes. So now there's 3,300 homes, but it should still be higher than that.
Right.
Here's your current median list price, and I could run this on NASA also and show you that.
Yeah, we're still low. So what you're saying is, I mean, we're still lower than in recent past, um, but I'm starting to see some more listings being posted on social media. So it seems like we're getting some correction. I mean, obviously we're not quite
Yeah,
at the numbers that we're supposed to be, but
no, and I don't think we're going to see that all the way through this year. So this year into next year probably. I don't think we're going to see that.
right.
Where we're at an even market. We're still in a seller's market. There's only 2,806 homes on the market in Nassau County. You know, and we're down 5.7% in inventory, or actually closed transactions. Um, from last year. You know.
Yeah, it's funny. I don't know if you saw this online, but it seems the new social media phrase is marry the house, date the rate. Have you seen that?
Yeah. Yeah.
It's kind of catchy. So I guess I'm going to start using it myself. But obviously, people are sitting on their hands in terms of not wanting to pull the trigger because of the heightened prices, higher interest rates. But the reality is that if the right opportunity presents itself and you can afford it, the house may not be available to you in 6 months, but potentially a lower interest rate, maybe, and you could always refinance at a later time. So marry the house, secure the house of your dreams that you love, and then obviously date the rate where you can change it at a later time.
Yeah, and I'm really trying to have those conversations with buyers. and sellers. So I think some sellers need to get realistic. While we're still in a seller's market, there's just in Smithtown alone, status change. There's been 2 homes that have come back on market. So if they came back on market, that either means the deal died or they were priced too high to begin with. Now they're relisting. And then there's been 19 price changes. And that's just in the past 2 weeks.
And those price changes are for all of Long Island, Suffolk?
No, that's just for Smithtown.
Just for Smithtown?
I didn't want to pull all of Suffolk and Nassau. Numbers would be in the hundreds.
Got it.
Yeah. I think I sent that out in an email over the weekend. I think there was 331 in Nassau and 200 and something in Suffolk price changes.
For the better.
Yeah. Reductions.
Right.
Price change is always a reduction. So I think some people are starting to get realistic. They shot for the stars and now they have to drop a little, but there's still bidding wars. There's still bidding wars going on specific houses in specific areas, I would say.
Of course. Yeah.
Yeah. The shiny pennies are always going to get the most attention,
Oh yeah.
What do you have going on? Any special programs or anything?
No, not so much. I thought I would share with everybody today a little bit about home equity loans. Maybe exchanging some bad debt for good debt, utilizing the obviously the increased values in people's homes today. I always get a lot of questions about the differences between home equity loans and home equity lines of credit. So I figured we could talk a little bit about that. I think we can all agree that the worst debt to have is credit card debt. Usually those interest rates are carrying crooked numbers. I think from what I saw in 2021, the average interest rate for a credit card with carried balances was 16.5%.
Wow. Okay.
That's a staggering number. And if you're paying if you're carrying $10,000 or $20,000 in debt, it's a very hard balance to pay down, especially if you're living paycheck to paycheck and you're on a fixed income. So utilizing your equity in your home to pull out a line of credit or a home equity to pay those off and have a more affordable monthly payment. The rates are going to be significantly less, number one, and number two, the terms are going to be longer. So that'll definitely keep things more manageable for anyone looking to have a lower monthly payment. So
definitely.
Yeah, and then what's cool about home equity lines of credit, it's very similar to having a credit card, but it's against your house. It's a revolving account, so you only get charged on the portion that you use. Some of the home equity lines of credit you could actually secure. So, for example, if you took a $50,000 line of credit and you used $25,000 up front, but maybe you're thinking that you're not going to have the ability to pay it off in a timely manner, what you're able to do is secure that $25,000 to a fixed rate. Meanwhile, keeping that extra $25,000 as a revolving line to use for future occasions. So you definitely have some versatility with the home equity lines of credit. Obviously, home equity loans are a fixed rate mortgage, very similar to your first position loan, but these would be in a second position behind that one.
Okay.
And these home equity loans are good to have too, or lines of credit, especially if you're in the market to potentially buy. If you don't have the necessary cash to maybe put yourself into contract, you could use the home equity line of credit as a source of money for future down payment. And the home equity loans are actually pretty easy to get. And what people don't realize is that we can do lines of credit on not only your primary residence, but secondary residences, investment properties you can get a line of credit for. So they really are making a push to allow people to take advantage of the newfound equity in their homes. And I will say that we're a little bit different in terms of the home equity loans that we offer, simply because we expand on the traditional guidelines that most investors allow. So, for example, you may be limited to a 75% or 80% loan to value on your residence in terms of pulling out your equity, where we can go up as much as 95%.
Oh,
So
wow.
yeah, so if you're equity challenged,
That's a lot.
yeah, it's huge. So, and especially if you are looking to purchase and maybe the only source of funds that you have or equity you have is in the house, well, this is a way for you to tap into it and use it for a purchase. So
Yeah.
definitely a great tool.
Is there, I know there's no such thing as bridge loans anymore, but is there a way to utilize the equity line kind of like a bridge loan?
Yeah, absolutely. Yeah, they're actually, I do have a couple of investors that are doing it. In the past, it did go away. It was something that was available and then it was taken away, and now it's back. So I do have an investor that will do a bridge loan, and that's just taking a home equity loan on a home that you're looking to depart to purchase a new one, and then obviously once you close on your sale, you just pay off the loan and call it a day.
So I think a lot of people are concerned. You know, my house is going to sell too fast. I won't be able to find something. So I don't want to put my house on the market, and maybe that you're going that avenue of making the purchase first, then putting the other house on the market.
Yeah, I mean, if there's enough equity in the home that you have, yeah, you could essentially pull all of it out and buy the house cash. Or if you can't, if you don't have the necessary months for down payment, then you can use your home equity loan for that. We also can secure a mortgage on the house that you're looking to buy, and then once you sell, then you can pay that down or do a principal reduction, which is something called a recast, which is a good option for people. So if you started out with like a $400,000 loan on the house you're buying, and you're netting out $300,000 on your sale, you can take that $300,000 and apply it towards your principal of the new loan you obtained. And then what they do is they will actually modify the term of the loan with the new principal balance, and they will modify your monthly payment accordingly. So you're not paying a $400,000 principal and interest, on that loan. You'll be paying principal interest on a $100,000 loan. So big difference.
Yeah, that's huge. That's huge. Yeah. Yeah, that's all I kind of got for median average in Smithtown. List price right now $787.
Crazy.
Yeah.
I say it because I live here.
I know, me too. I'm like, yeah, keep going. But there's still there's only 78 homes available right now in Smithtown, and I guarantee probably a third of those already have accepted offers and are moving to contract. Yeah. So it's making the market is still moving very, very fast. Considering interest rates went up and all that stuff, and people are in this, all of a sudden, fearful mode of the market's going to crash. If I knew the market was going to crash, I'd have my house listed tomorrow so I can beat the crash rather than wait for the crash, and buyers on the other side, I think buyers are making a huge mistake thinking that the market is going to crash and that they're going to wait a year and get a lower price on a house.
Right.
Will prices stabilize? Yes. Are they going to go down? I don't foresee it. And all they're doing is prolonging getting into a house. So essentially they could end up getting even in a higher interest rate next year. We don't know.
No, we don't.
Is there any projections on what the Feds are going to do? Are they going to?
Well, Feds are definitely going to raise rates, but again, these projections in terms of rates rising are not necessarily going to directly impact the 30-year fixed. The blueprint that the Fed's kind of laid out has kind of detailed what they're going to be doing. So the market has kind of reacted and adjusted accordingly based on what's going to happen. So when they raise the rates again, it doesn't mean if they raise it 0.5% or 0.75%, it doesn't mean that if we're at 5.5 today that it's going to 6.25. It's already been factored in. So I don't see that the rates are going to change all that much. I think we're going to live in this mid to upper fives range for at least the rest of the year. And
Okay.
it all depends if we end up in a recession or not. You know, if we do, there's a good chance that the rates will come back down at that point. And that's why I said to you earlier about marrying the house and dating the rate, right? Because if the rates do
Right.
come back down, you can always take advantage of it in 6 months from now. But more than likely, that house won't be available to you.
Yeah.
You know, and it's that old. You know, you look at what people are paying in rent on a monthly basis, whether it's $2,500 to $3,000, which is very common on Long Island. You know,
Yeah.
you extrapolate that over, you know, over a course of a year. I mean, that's substantial money. I mean, that's 30,000 plus to $30,000 to $40,000 in money that is lost.
Yep.
So yeah, you may be paying a little bit more today, but you know, you look what you're paying in rent. So
Yeah.
yeah, I agree with you. I don't think you should wait. I think if the opportunity is right and it's right for you, that you jump on it.
Yeah. I mean, you know, and just the idea of putting your life on hold because of an unknown factor is like, I don't know. I just don't believe in that in general. You
Yeah,
know, if you're going to take action, you're going to take action. You're going to do it for your family or for yourself or, you know, because it fits your lifestyle, not because of a projected outcome down the road.
yeah.
You know,
And
that's
I said it the last few times we've spoken. You can't time it, right? It's time in the
yeah,
market. So we can say that every week because that's the reality of
yeah.
it.
It is the reality of it. I mean, you and I both talked about our houses. You know, I purchased, you know, very low, and then went through that, you know, a volatile little bit of time, and now it's my house is worth a lot. You know?
Probably double almost what you paid for it.
Oh yeah, yeah, definitely, definitely double. Yeah, so it's pretty good. What are rates today?
Like I said, I would say mid fives, between 5.5 and 5 3/4 is kind of where
Okay.
we're at. And
So they went up. They went up above that though, and then they kind of like stabilized a little bit and came back
yeah,
down.
yeah, we actually hit over six.
Okay.
Yeah, so and then they dropped pretty good and, around the Fourth of July weekend, and then we gave back some of the gains. So we're kind of hovering in that mid fives to high, you know, mid 5.5 to 5 3/4. You know, depending on your credit and your down payment and all that fun stuff. But that's kind of a good, you know, a good reference for today's market.
Okay. And best advice is to buyers is buy now, right?
Yeah, pull the trigger. I mean, you know, again,
Yeah.
yeah, yeah. I mean, look, we're saying it because we're in the profession, right? But the reality is that you know, it's still one of the best investments that anybody could make, and it's one of the safest investments over time. So
Yeah.
yeah, I mean, I'm a proponent for it. I think it's you know, if you're my family member or a complete stranger, it's the same. It's the same message that I'm giving. You know, there's still a lot of great opportunities out there. There's a lot of mortgage programs that are available to help you. You don't need a sizable down payment. It's just really a matter of affordability and whether or not the monthly payment is something that you can manage. If it is, there's really nothing that is stopping you. As I mentioned before, it's, you know, if you find that house that checks off all the boxes, then there's no reason why that you can't do it today and then address the rate concern at a later time when the market corrects itself.
Yeah. Or even a house that checks off most of the boxes. Just get into a house, you know, especially if you're renting.
Yeah, stop paying somebody else's mortgage. It's crazy.
All right. Awesome. I'm going to end that.